All right. Thank you for joining us on this weekend webinar. Just a quick peek. First of all, as always, we'll be recording this webinar for everybody who cannot attend. I know it's a Sunday and I know it's 100 degrees up on the East Coast. So I know that a lot of people aren't going to be around. Just a quick peek. First of all, hopefully everyone got our newsletter from the weekend in regards to our updates. And it is our 5-year anniversary to the TradeXchange. In that update, we did let everyone know that all our current members will get access to TradeWire's part of the service, the TradeXPlus. Quick peek at what the TradeXPlus is. It's a SEC database as well as a press release database. So you get your press releases and you get your SEC database. You get also with that, you get your scraping. So if there is a purchase, you know exactly what the purchase is. Real time, very fast, and you get access to the filings as well as the press releases. So this is an added benefit to all our members as a thank you for being a part of our service. To get access to that, reach out to us via email or ask the desk and we'll get you set up. Once again, on this, it is a streaming real-time breakdown of the SEC database. You can filter out what you want, what you don't want, and you get access to the press releases as well. So jumping into our week ahead and previous week webinar, just a quick breakdown of last week. Markets continue to truck higher off the lows seen in mid-June. Markets ending the week up about 2 to 3%. Earnings season about 20% complete, and we are seeing earnings beats coming in a little smaller than usual. The 5-year average on a net income beat is around 77%. We are trending around 65% as of Friday, so we are seeing a little less activity on our revenue side against the average basis. We did see Europe raising rates by 50 basis points, a hike not expected at all by many. ECB first rate hike since 2011. I guess inflation is real. One area in the markets seeing a strong move as of late, as we all can see, is the small cap names. Seeing action in the Russell, strength over 3.5 to 4% the past week. You know, we have our watch list up on many of the small float names just to, provide any news moving headlines as always. But the majority of these moves on these low float names are on no headlines. So we've seen this in the past. We've seen how it ends, and we'll see what happens this time around. So we did see, the strength continuing last week. But our main focus is this week coming up. This is probably one of the most active weeks we've seen in a while. Our eyes are going to be on the Fed on Wednesday. We are expecting, as of everybody else is expecting, a 75 basis point hike, with some economists even anticipating a full 100 basis point rate hike. So we'll see what happens. We'll see the commentary by Fed's Powell on the Fed chair meeting and any indication on any future or feel on inflation going into probably one of the most important periods of the year, the holiday season, which is less than a few months away. If you think about it, time has gone by very fast this year. The next most important thing this week, earnings. We have probably one of the most important earning weeks this week. Some of the names that are reporting this week, we have Apple, Amazon, Boeing, Ford, Google, Intel, Coca-Cola, MasterCard, McDonald's, Meta, 3M, Microsoft, Texas Instruments, UPS, Visa, Exxon. If I missed any among that list, I apologize, but that is one big list of names that could easily affect the market in any direction being reported this week. And on top of that, we have one of the biggest economic data weeks as well, with consumer confidence, new home sales on Tuesday, to GDP on Thursday, and consumer sentiment on Friday. So this week is going to be a very busy week on all fronts on the news side, from the FOMC to earnings to economic data. And we'll keep a close eye and ear on all that, as always, in the news desk. Seems to be a very exciting week on our side. So just a quick peek. Let's jump into the week ahead. As we noted, some of the top earnings this week posted right here. Looking at the data-wise, not that busy of a week outside of the US. So we have Monday, we have the BOJ minutes, the Bank of Japan minutes. Tuesday, the FOMC meeting begins. We have consumer confidence and new home sales. We'll get an update by the IMF. On Wednesday, we have the FOMC minutes and the Fed chair presser. Thursday, economic sentiment, our US GDP. On Friday, we have consumer sentiment. So outside of the US, not that busy, but in the US, we do have a busy economic data point week. Company events for the week on the right, as always, not much on that list as well as the top conferences for the week. As the summer rolls on, these do tend to slow off going into the fall season. Weekly performance on the sectors, as we saw this week, majority of it green. We did see a little weakness in healthcare and utilities, but consumer discretionary saw a strong move this week, as well as industrials and materials. So we'll see how that correlates into this week. But this is, we did see a strong week across the board in the markets. Moving forward, economic calendar. This is where we'll tell you what we're looking at on our side. Monday, not that busy of a day. Tuesday, we do have your FHFA house price index, as well as the Case-Shiller home price index and new home sales. So we are watching the home sales and any data points on homes following the recent weakness we've been seeing on that side. And as always, it is a key inflation point that the Fed is keeping a close eye on. We also have your consumer confidence, and oil traders, we do have your API crude oil data. So Tuesday, we do have a pretty busy day. On Wednesday, we have your durable goods orders. We also have your FOMC announcement, as well as the Fed chair press conference. So those are the most important economic data points for the week that we'll be keeping a close eye on that afternoon. Thursday, we have GDP. And we have your, on Wednesday as well as Thursday, apologize for that. We do have your EIA petroleum status report and your natural gas. We'll change that on that one. That's just a little simple spelling error, but we do have Wednesday and Thursday on that side. And on Friday, we have your Chicago PMI and consumer sentiment. So we do have a very busy economic data point week. We'll be watching all that throughout the week. Earnings season continues. As we mentioned before, the list of names for this week are the biggest we'll be seeing throughout this earnings season. We did bold out a few of the big names we watch after hours and before market. So these are your earnings data. Companies that are reporting Monday, Tuesday throughout the week. We do have a pretty busy week this week, and we'll be keeping a close eye on Apple, Amazon, Intel. So Thursday is going to be one busy after hours earnings day. So we'll be keeping a close eye on all these. But Thursday is a key day with Apple and Amazon reporting. Industry comparisons, we are starting to see markets starting to level off a little bit. This was your coronavirus initial downdraft, but we are seeing markets slowly starting to base out with a small upswing. So we'll keep a close eye on this to see if this continues, or as some people believe, we are seeing a small bear market rally. So we'll continue on this, keeping a close eye on these comparisons. Coming up for the week on the beginning of the week, your target rate probabilities, we are seeing traders expecting 80.5% on a 75 basis point hike. And on your 1%, we are still seeing about 19.5%. So people are still believing that we could see a 100 basis point hike. Year-to-date percent returns, as always, we still have, your nat gas, heating oil, and crude oil still green on the year. Nat gas saw a big bump this week, up 122%. Saw a bump of over 32% this week. Heating oil saw a little downtick, about 9%, still around that 50% range. VIX saw a downtick as well with the recent strength that we've been seeing. Crude oil been basing around this 90, 95, 100 level, so it's still up about 26.4%. On the low end, we are watching copper continuing on their weakness. down 25%. The NASDAQ, silver, cotton, S&P, Dow, all lower throughout the week. Your AAII Investor Sentiment Survey, it has been bumping up every week since the beginning of July. We started July off around 19%, jumped up to 27%. On the bullish side, now we're at 29%. So the bullish mindset is continuing to grow as the bearish mindset continues to drop. So we'll see how this correlates to the markets, especially during earnings season and especially during this week on the economic side with the FOMC on Wednesday. So we'll keep a close eye and ear on all these sentiment surveys. Sector outlook year to date. As always, energy continuing to stay green on the year, up 28%. The rest all still red. Compared on a 3-year basis, everything is still green. So on a longer term view, markets still are basically very strong. So we'll see how this continues throughout the year. But as always, energy, the only one green, as we have communication services, consumer discretionary, information tech, all down 20% plus for the year. IPO lockup expirations, your expected IPOs, and then you have your FDA calendar for the week. Another slow week, but we do have some names on watch throughout the week. Monday, we have HUMA on a data presentation. Tuesday, APDN as well as a data presentation. Friday of next week, ARQT with a PDUFA date. Saturday, LEXX on an FDA meeting, and Sunday, HOTH with a data presentation. So we'll be jumping into the charts for the week. But as you can tell, the market's continuing on its pace of strength following those June lows. So we are seeing markets continuing bouncing off of lows and building a range. As we can see right here with the SPY daily, we are seeing a range being built on the SPYs with levels on the upside that are being tested and broken. So we'll continue to watch these levels on the SPYs. More color on this on the SPY members. As always, we try and keep our trend lines without changing them. We'll notate if anything is added or taken away. But you know, as we saw on this chart, this is from last week's chart. We just, you know, the days just continue with the trend lines. We saw a test on our downtrend right here that was tested perfectly and sold off. So we are watching these downtrends. Once this downtrend broke in the 388 level, we did see a pop to 400. That's a $12 move on the SPYs once this downtrend, initial downtrend, was broken. The next downtrend was tested but not broken, and once that was tested, we did see a $5 drop. So we are watching these technical levels, but we are closely keeping an eye on the volume side, as we believe that volume is a key indicator on any continuation moves. Next up, we have the SPY weekly. Again, broke the downtrend, traded up, tested that downtrend, closed at mid-level. So we're going to watch the SPY around that 400 level around here to see if we have a continued upside break or that test continues to show weakness. So we'll watch this level. Small blips, as always, posted in the on the charts. Next up, we have the SPY, another chart, the SPY weeklies. We like to focus on the SPYs a lot. Dropping down on the VIX. The VIX was trading in a range. As you saw, it did break a little range move over here. Did see a downtick. Our range is between that 20 to 35 level that we're watching on the VIX. It is a broad-based range, but this market is a very volatile market. So we'll continue to watch the VIX on any movement. This is your 10-year yield weekly. We are seeing that trend being tested around that 3 level. Seeing pops above it, but not a clear break. We did see a pop above it last week, but we are trading right at that other support that we had drawn in there of that 2.78 level. So we're watching that level as a base support. If this level does break, we could see tests in that 2.5 to 2.6%. So we'll keep a close eye on this 10-year yield, especially with the economic data and the Fed coming up this week. Another look at the 10-year yield weekly. You know, we are watching this being built right here as a range-based trade right now. So we'll be keeping a close eye on these levels And if those levels are broken, we'll be posting in the news desk. The HYG weekly. This is one interesting chart, which was a clear play on a technical move. We've been talking about this level last week that said it broke above that initial range bound that it was building. Broke above it, traded above it. We saw a nice little move last week. Tested basically the next level of resistance. So we'll keep a close eye on this HYG. If it retests the range or it continued to move to the 80 upside resistance. But that was a clear look on a range brand breakout to the upside with volume that we've been watching on this HYG. Then we'll jump onto the Qs. Qs are as well, been trading in a range. We've been watching this range of the 283.10, building nice little moves on the triple Qs, which is the NASDAQ. So we'll be watching that throughout the week. Oil, another player that's been in the news a lot lately. This trend line was there. It tested the trend line once again. That's 5 tests on this downtrend. So we all know on a technical basis, the more tests on the chart on a downtrend, the more significant a move could possibly be on the downside or the continuation on the upside if it is broken. So that 100 level is on watch as a key level to the upside on volume on a continuation move. We tested it last week, couldn't break through with it or stick with it on a volume-based move and ended the week around 95. So we're going to keep a close eye on crude oil as well, seeing how that would react moving forward. So those are your charts for the week. We went over the earnings for the week. We went over the Fed commentary coming up. So, we want to end the week as always with any questions anybody would have. We always try to keep these short, not too long because we understand it's a Sunday. We want everybody to enjoy their days. This is what we're looking at the TradeXchange, what we're expecting to be watching throughout the week. Like as always, a sum up, we believe this week is going to be very important. We have a large list of big cap names reporting this week. We have the FOMC meeting on Wednesday with the Fed chair presser on Wednesday afternoon. We have economic data points on watch with housing, GDP, consumer sentiment, and consumer confidence on top of it. So we have a pretty busy week on our side. As always, we always try to provide as much commentary in the news desk as we possibly can. We have a quick question on the TradeWire. Yes, it's a separate box. It's a separate portal. As we always tell our members, the TradeXchange news desk will never be changed. We will always keep that a streamlined information service. This is a separate box, which you can access it through the TradeXchange news desk to all our TradeXchange news desk members. And it's a separate box that you get a free real-time SEC and press release database. So when it comes to that, we keep a close, we try to do what we can for our members. It's been a good 5 years for us, and we want to give back to our community. We want to add more value to your trading days. And we believe, since we do provide this information in the news desk and we see the value it provides, we want to give all our current subscribers the opportunity to make, all their decisions based on, information that the TradeXchange provides them. So that's why we added the SEC fund to all our current members, free of charge, as well as the press release. If you see a headline in there, you can just pop into the TradeWire and you'll see the release and you can just pop it up and then, get your full release on that specific headline. So is the TradeWire. The TradeWire, as we mentioned, only for our current subscribers. This is nothing that, it's going to be given away for free to anybody else. This is for our current members as a thank you for being a part of the TradeXchange. And it's a gesture of us to give you an added edge to your trading day. So this is something just for our current members. Another quick question. I've been finding the volume pop alerts on stocks very useful during active trading. Would it be possible to add optional sound alerts that could be turned on so we don't miss those alerts? That's a great recommendation. We'll definitely look into that. We are looking on two other different things we're working on this in regards to the news desk. We are working on adding a more customized alert feature as well as a more detailed search and possible portfolio feature for our members, as well as focusing a lot of our time on a new updated faster squawk for our members outside of what we discussed in our newsletter. So that is something that we will be working on in regards to the more customization of the news desk. We were spending a lot of time finalizing this TradeWire thing for all our members. Once we got that done, we just got to work on a few more little things of integration into our system. But we would just want everyone to know that we are doing a lot in regards to the actual news desk, the squawk, our community chat room, and a lot of new and exciting things, research and information based for our members. If there are any other questions, I'll give it a quick second, and then we'll close it up for the week. Just give me one quick moment. So when it comes to squawks, we believe the squawks, we focus on a few aspects. Someone had a question in regards to choosing the squawks. We believe the squawks are for market moving headlines in regards to economic data points, unusual options, any specific press release in regards to a contract deal or a FDA headline, throughout the day, anything that is market moving, Fed speaker commentary, anything in regards to a large contract deal or any in that aspect, we are typically will squawk. We do not like to squawk volume moves because typically we are the TradeXchange. We provide information. So we want to make sure it's backed up with some sort of a headline or any of that aspect, unless it's something major that we are seeing a strong move. If something's up 50, 60, 70, 80% with circuit breaker halts, we will notify our members via squawk, but we try to keep the squawk only on market breaking headlines, top earnings. We don't like to flood the room on random company earnings. We like to focus on top market moving company earnings, as in Apple, Amazon, Disney, McDonald's, and unusual option activity, economic data points, and any other headline via press release in regards to contracts or deals or FDA related headlines. So that's what we try to focus on. We just like we keep our news desk streamlined without any noise or any fluff to keep it moving. Sometimes you won't see a headline for 15, 20 minutes. That's because there's nothing out there. So we try to provide our squawk the same way. We don't like to, add noise to the squawk because we want to make sure that when the squawk hits, that there's a reason behind it. Either it's a like we mentioned, a Fed speak, or if the markets are moving on a headline outside, if it's commentary from overseas or in regards to a Ukraine or Russia headline, we like to provide those because those are things that could actually possibly move markets. So that's why we try to keep the squawk streamlined just as well as we keep the news desk streamlined. Also agree on that comment in regards to that's why someone believed that's why optional sound alerts might be more appropriate. That's what we're working on. We're trying to work it where it's more customizable for our members and our side to create separate indications on moves, just like we have our handles for TX economic, TX options, TX Fed speak, TX filings. We're working on creating some more lesser known things where traders and members have the ability to also ignore certain handles throughout the trading day, just in case if you do not like to follow options. We're working on a system where you can ignore the TX unusual option system. So we are working on a lot, and we always appreciate commentary and feedback. You can always email us and shoot us in the message through Ask the Desk. If you ever have any recommendations, we'll always be open to them, and we'll always do what we can to provide the feedback on what we can and cannot do. So we'll keep it open for a couple more minutes. If anyone else has any more questions, we're going to go radio mic silent real quick. One quick one, someone asked, like, what is the scraping? I believe that they're mentioning about the trade wire. So this is what the scraping means. Yeah, when you have your filing CX deal, let's just say, it tells you who bought, chief executive officer, purchasing 420 shares at $2.998 on a total price of $1,259. So that's what we mean by scraping. On a Form 8K, it tells you exactly what the Form 8K is about. Enters into material agreement, all the items, all the headlines are there. So that's what we mean by the scraping aspect. On the sales side, or on a Form S3 gives you exactly the filing on that aspect. We try to provide all those headlines, and like I said, you have if you don't want the 8K filings, you don't have to have the 8K filings. If you want the selling, you have the selling as there as well. So it gives you all the access to all the filings on a breakdown. In Moderna, we saw a insider selling by the director, selling 10,000. So that's what that does in regards to the scrape. So once again, we want to thank everyone for joining us this week on the TradeXchange weekend webinar. Enjoy the weekend. Enjoy your Sunday. Join us tomorrow morning for the pre-market prep on the Squawk, and join us tomorrow for the news desk. Thank you. Enjoy. TradeXchange out.